welcome everyone. I can see the numbers climbing up here. We've got over 70 participants already, which is fantastic to see. An exciting day ahead of us. But because we're on tight time, I'm going to take the opportunity to introduce our speaker today really quickly. Selena Puttick, I'm so happy that she's here. I've had the good fortune of hearing her speak many times. She always brings her own personality and some great messaging as well. Selena is currently an AVP and Associate Chief Underwriter with us, so very lucky to have her spending this time with us today. She started at Manulife in 1989, and in her current position as Associate Chief Underwriter, she works with multiple product lines and distribution channels and leads the team responsible for the day-to-day operations and risk management of the business, which includes training, philosophy, co-signing, claims reviews, and my goodness, I think so much more. So a large responsibility on her plate. Selena has represented Manulife on many different industry organizations, and she is currently working with the Canadian Reinsurance Conference team. On a personal note, which I think she probably shares with many of you on the line, she is so excited to get back to traveling. Myself as well, I've got a trip planned this summer, so fingers crossed that works out. But without any further ado, I will turn it over to Selena to talk today about underwriting at Manulife and some of the things that we can expect going forward, and maybe some of the things we've learned through the pandemic. Over to you, Selena.
Thank you, Dan. Thank you, Wendy, and thanks for having me here today. I've kind of got a mixed agenda here for you. COVID-19, still prevalent, still something that we want to talk a little bit about. It has been a long time, and we will be excited when we can kind of move past this point. But it is something that we want to touch on because there is some impact to underwriting and some other medical trends that we want to address today. Reinsurance 201, a lot of you probably know the basics with the reinsurance, but I want to highlight some things for you today, along with the large case perspective and what success looks like. I do want to introduce you to the Summit experience, which is something that we've just launched that you might have seen on our advisor portal, or some information might have been floated past you. It's a very exciting initiative that we've got, as well as claims. I think everybody's interested in a claims update. And then a scorecard I thought you might be interested in based on how we're doing and what we've developed last year. Just trying to introduce it and do some enhancements to it this year that may interest you. So COVID, you are here. It's kind of like a little map we've got going on. So we've got the pandemic outlook. There was 3 scenarios on how the pandemic might evolve in the coming years. And you can kind of see right there in the middle where it's highlighted is kind of where we sit. And based on this 6th wave, we're kind of in between the B and C version, not right smack dab in the middle there. So COVID-19 cases, plummeting and vanishing, it's probably not going to happen. On the other side, constant mutations and unpredictable disease, that's probably not where we're at either. We are looking at this becoming more of a seasonal endemic type of disease or process. That's the high likelihood. That's probably how we're going to be looking at this evolution. And then they talk about the beliefs, the core beliefs that we're working on here is, that we'll still see those infections every year. The severity will continue to decrease over time. There is some thought about it not being quite as benign as the common cold. There might still be some elements in there, depending on your risk factors, that could be a little bit more dangerous to certain people, but that it will potentially decrease and become more manageable. We have to learn to live at some point with this in our populations. And then the mutations will continue to arise. And again, we're going to continue to look at ways to either treat, vaccinate, and keep the population safe. There's a lot of good medications that are coming up that are available that people can use. I think our doctors, we still talk about COVID. We have a bi-weekly meeting just talking about COVID and advancements. And one of our doctors had said he actually has COVID right now, had to cancel some travel plans, so was a bit on the grumpy side. But he did mention that on the bright side, he did have a relative that was 94 that ended up with COVID, and immediately they gave them some treatments, and the next day was feeling a lot better. So it's not like the beginning where people didn't really understand how to treat and what to do. There are some very effective treatments and ways that we can help live with this and control and reduce that factor of severity. So I wanted to highlight some claims here, information as well, because a lot of people and a lot of the questions that we get asked is how has COVID affected claims? And you can see here that the claims count in 2020 and 2021 relatively consistent. The 522 and 528 was the number of claims. In 2020, for example, we had almost 16,000 claims. So only 522 of those life claims were COVID related. And then you can see the amounts and you can see the averages, the claim amount. The interesting thing is the average age of death, 83 and 79. The maximum age of death, 106, was one of our claims. And the policy duration, 37 years, 35 years. These policies have been in force for a long time. And these were probably more of the population that had their policy for a long time. They were probably in a long-term care facility, potentially some other comorbidities, but they're looking at these and we're seeing that that was the population that was hit, but it's not widespread. It wasn't a massive hit. I think it was 0.03% of the business when you look at from a numbers perspective. So it wasn't that we weren't already prepared for this type of experience on our books. I think what is going to be coming up is more, how does this impact us go forward along COVID? What does this look like? Because I don't think from what we're seeing that COVID is going to be necessarily the long-term problem here. When you look at the death rates across the different countries, this one here, it falls off. Canada didn't have their stats updated when we had done this, put this together, the slides, but it stands to reason that it'll follow a similar path and trajectory. You can see where you've got this excess deaths from an all-cause mortality, not just COVID. So those were our COVID claims that I was mentioning before. But when you're looking at this isn't just COVID deaths, these are other ones. So there were some incomplete because of delays in reporting. However, you're looking at this and thinking, you know, where these spikes are and where these increased death rates. Some of it potentially could be depression, suicide. We've got other factors, delayed medical care, which I'm going to talk a little bit about in the next slide. But those things are potentially going to have an impact. The delayed healthcare that I was just mentioning, we all know and we've read in the papers that there's been delays in people getting treatment or care. And sometimes it's because of the actual doctors and the availability and being able to do that. And some of it is just the apprehension that people felt about actually going in to see their doctor. They maybe had a little chest pain and thinking, oh, it's probably just exertional or maybe nothing to worry about. And they might have just ignored some of the signs because they were afraid to go out or to go into the doctor's office or go to the emergency room. I remember our doctors, we have ones that are still working with us, but they have their own practices or they're working in the emergency room. One of them was at the Jewish General in Montreal. And he was frontline COVID. And he said, it's interesting because the emergency room, where did all the heart attacks go? I mean, they were full. And for anyone that's had to go to an emergency room in the middle of the night, with either sickness themselves or a sick or injured child or other, it's full and it's almost always full. And those people weren't there. They weren't coming into the emergency room. So it was interesting. He said, where did they go? And that's where we're concerned is that, there wasn't the early cancer screening. There was people that they weren't able to go in maybe to see their family doctor in a timely fashion, or they skipped their routine physical. And maybe they were going 6 months, a year later, or they said, well, I won't do my annual, I'll just do one next year. And then they find a lump or a bump or something that potentially would have been found through their routine screening. So say you turned 50 and you were supposed to go for your mammogram, but that got delayed. Potentially there was something there that could have been picked up a little bit earlier. So what is the impact of that delayed healthcare? What are we going to see down the road when this all starts to come? Now, some of the cancer reporting was lower, and it wasn't because cancer went away, it was because they weren't finding them at that time. So we do expect some catch up with some of that testing and some of these routine screening that's going to be starting and getting back into the process for people. And then what does that mean? Because we know if they find it early, it's definitely a better outcome for individuals. So we definitely want to make sure that people have that routine screening started up again and that we are finding situations where we can help people a lot quicker. And we had some real life examples because we have what we called a post-processing rule, which is a PPR, which stops a case from going straight through processing on our artificial intelligence algorithm. And this just shows the increase in answers where people come in for insurance and they're saying they're waiting for a pending test or a pending result or haven't been able to get that in yet because it was taking longer. So we were seeing that this delay was impacting the insurance population where they were applying and still waiting for a test that hadn't been done, which might have been done a lot quicker had we not had this pandemic to deal with. So the pandemic did have some really upsides for us as far as new testing limits. So we had life coverage where we've increased our limits to $5 million, age 18 to 50, up to and including that amount. 51 to 60, we went up to $1 million. No preferred risk on a lot of these products, especially where we're not testing. And the higher risk, more traditionally risky cases still need underwriting through a traditional method. So I'm talking people that have diabetes already, ones that have a family history that's significant or have other risk factors, smoking along with blood pressure, cholesterol, those different things, or they already have a disease or a risk profile. Those ones will just go through a normal traditional path. It wouldn't necessarily qualify for this more of an accelerated non-fluid underwriting. We still get doctor's reports at over 2 million for these cases. So that's still something that's there as far as reviewing and making sure that we're doing our due diligence. The main focus is on the application questions and the answers. And we do expect, because it's a contract of utmost good faith, and you guys do a great job in positioning with the clients that those disclosures are so important, that that's pretty much how we do the basis of reviewing and making sure that we're going down the right path in assessing the risk. We did develop a smoker algorithm, which evolved into a high risk algorithm, which is really behind the scenes. We had a tool that analyzed over 40,000 cases on our books to try to figure out the profile of a smoker. The main concern about removing fluids is that the sentinel effect is gone, that people think I'm not being tested, therefore I don't need to tell you the truth around my smoking habits. And that's not accurate. Again, being a contract of utmost good faith, we rely on those disclosures and we expect them to be accurate. So this actually profiles where it might be a higher risk applicant that could be a smoker, but not actually disclosing it. So those cases are very rare where the only thing that comes up is this high risk, but there's a probability that they're still a smoker or are a smoker and non-disclosed. A lot of times those high risk, that score correlates with higher risk in general on the entire file. So we're already looking at other factors like build and blood pressure or potentially diabetes that are already cumulating into this high risk that we're going to have to get a traditional underwriting approach. And then it's a combination of financial and medical risk factors when we're looking at these, because again, we just want to make sure that we've got that holistic approach. So it's important to set those expectations up front. A lot of times, if you're selling the case and you say, well, you're 40, you're applying for $2 million, you won't need labs. But if you don't know their history and they've got diabetes and they've got some other factors there, they will definitely need labs. So it's more just making sure that you understand that, say, hey, you're in the right age and amount to potentially go through without labs. However, some do have a more traditional underwriting depending on the risk profile. So we'll see what we can get, but that's where it becomes a bit tricky, and just making sure you set those expectations will really help in the relationship with you and the client, and making sure that they understand and that it's not a surprise or a disappointment when they aren't able to go through a fluidless experience. There is a large percentage that go through without fluids, so I believe it was approximately 25% that end up being tested. So there's a good population or a good portion there. That amount goes down in the lower ages. So say that's only maybe 10, 15% in the younger ages, but it goes up in the older ages. And that makes more sense, again, strictly because of their medical history. So reinsurance, just making you aware, we did successfully negotiate 14 treaties last year, 3 life products, 6 different reinsurers. So we were able to get those in place. And again, this just helps with our negotiation, and it helps with our capacity and what we're able to bring to the market. So some of the reinsurance terms that I just wanted to bring up today is around automatic reinsurance. Automatic reinsurance and facultative reinsurance are just 2 different types. One of them just means that we can just send it directly to the reinsurers. We don't have to ask permission or send papers. Facultative is where we get them to look at the file and provide their opinions. Automatic, we use our own manual. Facultative, they use their manual and their expertise internally to try to come up with an offer for us. So auto bind is just where the reinsurers trust the direct company to automatically bind that case to them. So they never have to see the paperwork. And we'll talk a little bit about our limits at Manulife. Some companies might have lower limits because, again, depends on their own internal retention, their own capacity, how much they can keep on the case, and what their treaties say. There's a jumbo limit as well, and the jumbo limit is where everyone in the market has to look at this jumbo amount, and if it goes over that, then every case needs to go to reinsurance. When you're looking at these limits, you're looking at not just what is the case that you're sending to Manulife. We'll have to look at what's in force, what's been applied for at other companies, and we need to add them all together to see if they satisfy these different limits. And capacity is in the market. It's whatever we can get from each individual reinsurer, plus our own internal capacity, our own retention that we can keep within Manulife. So Manulife's internal capacity, I believe I've got some of them on here. Our own internal capacity is 30 million for single life, 35 million for joint, which is quite high. And we're willing to put our capacity on the books. We'll do it on our own without reinsurance if it's the right case and potentially the market is saturated. We're not able to get any capacity in the market. But we were able to get an increase in capacity by doing all this treaty negotiation of 270 million of reinsurance capacity. That includes our own internal retention. So this is great news for those people that are in that ultra high net worth market that are looking for these large amounts. It's exciting for us because we have some more opportunity and more options and more choice when it comes to reinsurance partners and potentially a different view on cases. The automatic binding limit that I was talking about earlier is 60 million. So if you sent $60 million case to Manulife and there was no in-force insurance, we could underwrite that case and never send it to a reinsurer and have them look at the file or give us an opinion. It would strictly be 60 million on the books, underwritten by Manulife and supported by the reinsurance. This just goes to show how much faith they have in Manulife and our underwriting manual. We have our own proprietary manual, and they understand the expertise that we have and the people that we have at the table making these decisions and the support we have. And we have an excellent leader in Karen Cutler who helps to provide the philosophy and that information to the team and lots of training. The jumbo limit 65 that I had mentioned. So again, when you're looking at cases, if you were to send that 50 million to Manulife, we could do it on our own. If you sent it to us and to 2 other carriers, we'd have to add that together, and now it's 150 million. And that becomes a case that we have to send to reinsurance. Everyone will have to go. And one of the reasons for that is, again, they don't look at one to place. They don't look at that. They look at the fact that there's 3 out there, and they want to make sure that they can help have a say in managing that capacity and where it goes and how it gets distributed or placed in the market. So it becomes important to them to make sure that we've got the right eyes on the case when it starts to multi-app throughout the case. Now, I think in the market, when you ask for a lead underwriter, it does help because we know we're coordinating cases. And if you're trying to place multiple policies with multiple companies, we can be very collaborative in trying to figure out what's the best mix of trying to get that capacity for your client and making sure that they get what they need. We do have dedicated support, and that $50 million or more mark, we've definitely are treating a little bit differently. And I'm going to talk a little bit about that in a moment when I come up with the summit experience that we've got for advisors in these large cases. But just success in the large case perspective, just to highlight what an underwriter will look at, they're looking at the illustration and they're looking at the initial death benefit. What is the funding pattern? What's the projected total death benefit, approximate life expectancy, the ultimate death benefit, the net amount at risk. This is important too, because if you're applying for $50 million and it's a whole life policy, par policy, and it's going to grow to 80 million, 80 million is the amount that we have to solve for. So even if your routine requirements are based on the face amount, from an ultimate net amount at risk perspective, that's where we need to look and decide, do we have enough capacity? So capacity in the market, what we're looking at from a reinsurance perspective, those are all based on ultimate. What is it going to grow to? How much do we have to make sure that we have set aside in order to fulfill the promises that we're making, basically on how this policy is going to behave and grow? So the one challenge that we do come across as underwriters is the premium solve versus an insurance solution. So a lot of times we will see illustrations based on the fact that they have X number of dollars that they want to put into a policy, and that amount will balloon or grow the ultimate net amount at risk to an amount that doesn't quite match their insurance need. And for us, we have to look at insurance first and make sure that there's that insurance meeting and that the premium and the amounts that they put in is reasonable. But we still can't forget that although people are using it for investments and using it for those types of tools, that it's still an insurance solution, and we have to make sure that it satisfies that insurance need, that insurance risk. And then we do have field support with Greg Lands and Marilyn Odette for large cases and pre-submission. So it's really nice to have that team in the field. They can do some pre-work for you. And again, they're highlighted in our summit experience, which is a real special experience that you will have with Manulife. Now, a large case being successful as a cover letter is huge, and you've probably heard this over the years. This is something that we actually do for our reinsurers as well. We'll put together a cover letter and we'll say, this is what we're seeing, this is why we're sending it to you, this is why we think it's a great case, this is why we want you to either match or improve upon whatever offer we're making, or support a standard decision when it's one that we've gone to just because of the face amount being beyond what we can accept. So again, preparing the client, having that great cover letter, making sure that you've balanced out the affordability of the premiums, the needs analysis for the insurance, face amount considerations. I think in these cases here, it's really nice to have a picture painted for us, because a lot of time these cases don't just happen overnight. They've been months or years potentially in the making of discussions and trying to solve for solutions. And then it finally comes to fruition and you want to pass it to Manulife. And for us, we don't have all that background and all that information and all the blood, sweat, and tears that have gone into making this sale. And it is helpful for us to know, like, this is all the work that kind of went in behind the scenes before we passed the baton to you, and asking us to take on and become an advocate for this case and to get it across that finish line for you. So it really does help us help you when we see this and we see what's been put into it and all the work that's gone on behind the scenes, again, to try to help support and then to tell your story ultimately to a reinsurer if we need to. It's very, very helpful. Our shopping philosophy, we do have that auto bind that I talked about, and we're prepared to use it for sure. We don't feel we need to shop every case. We do feel that we have solid, great decisions and a lot of great resources here at Manulife. We do a critical review because there are some places in our manual, like I said, it's a proprietary manual that we develop ourselves. And there's opportunities there where we're probably a little bit sharper on our decisions, and we may have looked at it a lot more recently than a potential reinsurer. So we have access to the reinsurance manuals. We can compare and take a look and see, but we do have some sweet spots, so to speak, where, you know, we're a little bit better than a reinsurer, especially during COVID. COVID has been really challenging. It's been all over the map. We do see a lot of reinsurers a little bit shy, I guess, of putting their ratings forward on substandard risks in the COVID environment. We have a COVID committee at Manulife where we won't send it to reinsurance necessarily. First, we look at it internally on those cases that are higher substandard, 250% or higher, because we were getting a lot of, you know, above risk tolerance where reinsurers weren't prepared to participate in those decisions. So we wanted to make sure that we were comfortable with it. And if we were, then we were auto binding and just letting the case stand on its own and binding the pool to it. So it really has been difficult to predict what the reinsurers will or won't say on certain decisions, but we are trying to shop every large case. And we had in the past shopped ones that were $1 million or over, a little bit lower if you're an elite advisor, again, just to get the best possible offer. And because we keep so much of the risk, we're not afraid to negotiate. If it does come back not quite what we were expecting, usually we can call and have a conversation and have them at least come to the table with what we had expected and what offer we thought we would be able to provide. So we have a lot of work behind the scenes when it comes to reinsurance, and a lot of negotiation happens because of the strength of our underwriting and the amount of capacity and retention that we keep on those cases. Communication has been a huge focus this year for us. Not only internally, where we meet monthly with each reinsurer and we bring up cases and opportunities to improve. As well, we do biweekly large case meetings. Again, we want that consistency. We want to get creative on these cases, and this really helps the whole team talk about these cases and how they can move forward with some of the cases when we come across certain hurdles or certain things that are a little bit in our way. How can we move those roadblocks, and what do we need in order to push a case forward? We're really proactive with our communications from underwriting, especially in the large cases, but across the board, we're trying to be a little more clear and concise in our messaging, more calls, but also don't hesitate to call and find out where the case is at if you need help. Before I move on to the summit experience, I'm just going to check in with Dan. Is there anything that you think I should be answering now, or did you want to wait until wrap up?
I think we're good. Haven't seen anything. There was one hand up, but I think we'll kind of hold questions off till the end. If anyone wants to, you're certainly welcome to use the Q&A and we can answer those on the fly, but I'll let you just keep going along here. Yeah.
Sounds great. Thanks, Dan. So the summit experience is something that's hot off the presses. We've been working on it for a little while, just about large cases and what you can expect. So I just wanted to highlight this a little bit before, since I had the opportunity today to talk to you, to see if you had a chance to look at this yet. And if you haven't, I encourage you to seek it out. But here's kind of a brochure, and I just took some screenshots of our summit experience. Susan Kerr was really involved in helping with this, same with Karen Cutler and Rob Hollingsworth, myself, some of the sales teams. So there was a bunch of us that got together to try to talk about what makes us different and how can we help when it comes to these high complex net worth cases. So your large case clients expect the best, and that's what the summit experience delivers. So again, this kind of shows how we go above and beyond every step of the way. So I encourage you to kind of take a look through it. I'm just going to do a high level review today. You can see down the side, there's a bit of a guide there where it's got pre-application, application, underwriting, and then delivery. So we tried to highlight in different stages and phases of an application, what you might see. So we talk about the pre-application, and again, just getting that guidance. We have our tax, retirement, and estate planning team that with their expertise, they can help bring a case to life and help talk about what they see and provide information on the sale. And then our field underwriters that I had mentioned before, again, can do a lot of this pre-work. So we want a really smooth handoff between whoever it is that's working with you at Manulife to make sure that you know that we care about the case as much as you care about the case. We care about the client as much as you do, where we're trying to make sure that we're on the same team, we're making this happen, we're really bringing it forward for you and being, again, that advocate for the case. And then the application itself, again, any of the details, any of the information, Greg and Mary Lynn would help write a cover letter if we needed to, but just acknowledging that we've got that case and to thank you for that, and setting up a cadence of potentially meetings or what you need from us in order to make sure that we're all on the same page, and that if there's anything missing or if we come across something, there's a bit of a snag somewhere, that we can easily rectify what that is and get that back on track. Have those really great conversations about what we're trying to achieve and continue to move the case forward. So again, we have that proprietary underwriting manual, which is based on our research, and that gives us an advantage. I think we're just updating the diabetes section now, but we've updated cancer sections, which has brought us to the forefront of review, as well as cardiac cases. And we do have a cardiologist on staff that helps us review any complex cases. So that's been a real advantage internally for us. So again, we've got priority APSs, we have a VIP service. So again, we'll call doctors if we need to, we'll call doctors' offices to get information quickly. And then on delivery, again, we do that, making sure that it's looking right, everything's great from a fact-checking perspective, that the case looks good, quality control, and send that out. So it does mention that the summit experience is available for the insurance cases, 5 million face amount or 50,000 annualized premium. And then it talks about critical illness and DI as well. So it really is those higher cases, but really excited to be able to provide this experience. These are just a couple visuals for if you can see Greg and Marilyn. There's some pictures on the side. But again, they are really an amazing resource and someone that can tap in and help out when it comes to packaging your case. They've met with clients, they've talked to them, they've helped prepare decisions, help discuss why we've made a certain decision. If you need help selling a particular rating and letting the client know why, or again, setting that expectation up front, they're able to say, hey, given this information that I have, I can kind of let you know where you stand. Also leveraging quotes and substandard, our program there where potentially you've got one substandard life and one that's standard on a joint case that potentially could come up as a standard joint offer. So there's really a lot of different nuances that they can really help with when it comes to setting expectations. And again, these are our skilled tax and estate planning team, our large case specialists and experts. We've got amazing wholesalers. So we've got this whole family of people that are here and that care so much about the business and care about what we do, and they really believe in what we do. And you'll find that we're committed to helping you and the client achieve your goals. So this is just really excited to put this together and to put this on paper. I know it's something that we felt, and it's something that at Manulife we have, it's driven us forward, but to actually articulate it and to put it into a package that you're able to see, you know, what we're doing and how we're doing it and the people behind these cases and these different functions that really make a difference. So again, speaking to people, having that high level of communication, having those touch points in those meetings, just really valuable and something that we're definitely carving out a lot of time for. And again, this just highlights the manual itself. We did have Florence Marino wrote the book on the tax. So we've also wrote the book again on our Manulife underwriting manual, which we affectionately call MUM. And then again, the retention rates that we have in Canada are really high. The 30 million, 35 million really helps us with our negotiation ability when it comes to reinsurance partners. And then the retention that we can use with our reinsurers, again, can help us turn those cases around a lot quicker when we don't have to be bogged down in reinsurance approvals. And then success. Like, we understand that large cases are unique and definitely can be very complex. We treat them like projects, and we just want you to know and understand how much we care and how meticulous we are every step of the way. And everyone on the team is committed to this being a seamless and pleasant experience for everyone. So that was just a quick introduction to the Summit experience. Ask about it, check it out. I think that you'll be really happy and pleased with what we've got in there. And again, it's not just words on paper, it's something that we're living and breathing every day when we look at these cases. So on the claim side, just wanted to mention that we did do some changes. We have some new people. Jill Buchanan is our AVP of claims. So there's transformation happening, and that takes some time. And I'm not sure if you've had any recent experience with claims, but we are working through some of those hiccups that happen when we have that transformation, a little bit of change in direction and structure. We do have an online digital claims form available. So in case you haven't had a claim recently, make sure that you check that out because it can help with time and make it a little bit easier. The biggest advantage is that forms that come in not in good order are eliminated when you can use a digital claims form, because every section that needs to be completed has to be completed for it to be submitted. And then we've got everything we need to be able to adjudicate that claim quickly. And then as far as modernization, that's touched claims as well. So we've got something called ADAM. I mentioned ADA earlier, which is our artificial intelligence decision algorithm, which is our automated underwriting system. And that's been in place for a couple of years, and we're looking to expand ADA. We've also developed ADAM, and ADAM is in the claims team. And that stands for Anomaly Detection Adjudication Model. So it's a tool to flag anomalous claims. So things that just are a little out of the ordinary. And it was a joint effort between our claims adjudicators and our advanced analytics team. So again, combining multiple data sources, building this model and looking for patterns in the data. Again, just highlighting, not necessarily making the decision, but highlighting patterns that you may not notice or an individual might not see, but a an artificial intelligence model may find. So it's just looking at those patterns. It's, again, not making decisions. It's not intended to increase any denials or any of that stuff. It's mainly just to pay the right claims. Fraud in any business is not good for business when it comes to anything that's on our books. Paying claims, we pay valid claims. If you have a lot of fraud in your business, and obviously it's going to be a concern. So we just want to make sure, again, that we've got this tool that helps us detect fraud, because fraud doesn't help any of our customers in the end. So we're testing and learning what this looks like. If there is any validity or valid in using this or expanding it, at this point here, it really is just test and learn, and seeing exactly what we can come up with when we get the results for Adam. It's kind of exciting to be able to use some of these different tools and see how we can, utilize it in our business. And the last thing I just wanted to touch on was a firm scorecard, and I apologize for the dark title slide here. But what we've developed is this scorecard, and we've been working on this over the past year, and we're developing it more this year in 2022. But we've got a little box where we talk about key metrics, and you can see where we want to try to highlight where ADA is making some decisions. So ADA does about 33% of the business. This is for 2021. And you can see how many applications went through, and that's part of this review. 10% of those decisions were same-day decisions. So the information was here, the tele-interview was done, and a decision was made that same day, which is great. And we want to increase that same-day decision number, but right now at that 10%. EAP, which is great, and that again helps the same-day decisions because EAP will allow ADA to be utilized on those applications. Paper application, there's just not enough information for us to be able to use it. So 85% is EAP, 60% is e-delivery. And I know some of those things are because we aren't able to do corporate delivery on EAP. There are some certain limitations on our e-delivery. And of course, we're looking at ways we can expand that and make that a little bit better as well. It's never a one and done. It's kind of a continuous learning and a continuous growing and improving on what we've already implemented and brought to market. So you can see that we've split up the buckets into transactional, traditional, and large case. Again, if you're not in the large case market, you're more concerned about how quickly are my cases going through if it's less than $1 million. Traditional is going to take probably a little bit longer, and those ones are ones where you're looking at there's more planning involved, there's potentially combination cases. So you just want to take a little more time to look through those cases, and it's going to take a little bit more time when you've got multi-life on an application underwriting both lives. So you can see where there's some days saved using EAP on both the traditional and transactional. At the end of the year in 2021, there really wasn't any major savings between EAP and paper. But again, those large cases have a life of their own. It's not quite as comparable as some of the other business that should go through quite quickly. So then down the bottom, we've kind of split them up so you can see where we've highlighted which ones are transactional, traditional, and large cases by the bar graph. And then there's a cumulative total. So you can see that 4% are done within 3 days, 14% are done within a week, 10% are done within the week. And then if you add those together, you've got that 14% total business. So when you get to that 3-week mark, there's, I believe, 45% of the business is done in 3 weeks or less, which is kind of nice. And then we know that there's some that'll take longer because, again, they're larger cases. We need doctor's reports, they're older ages. So it really helps to tell the story versus just saying cycle time is 35 days or 28 days. It's 60 days. It gives you a flavor for why and where that business sits. And we can run this by, this one here is by everything that we received. I did run it by IDC just to see how that compares. And you can see where it's 10 days saved using EAP, 8 days for the traditional. And then the large cases you can see took a little longer. So the thing that definitely throws that off a little bit too is sometimes we'll get a large case at the end and all the evidence is here. We just need a med share. And other times we're piecing it all together along the way. So it does have a little bit of a nuance there in the review and depending on how many cases are actually in that bucket. So you can see 41% were done within less than 3 weeks last year on the IDC business. And you can see the 78% e-app rates, 58% e-delivery. And again, that 60%, pretty close. The e-app usage is a little bit less. And then the same day decisions at 6%, 30% went through ADA. And then I did the same for the first quarter of this year. So you can kind of see the amounts and where we're at. Again, it has to build and grow in order to see some of those numbers. We have 9% same day decisions, and then 7% when you look at IDC Worldsource specifically on the numbers here. So really exciting. The other thing we wanted to add was this just defines when we have this out to you, it just defines what is cycle time, what is ADA, same day decisions, and it talks about what business segments are in each one. So you can see how large case is defined, how traditional, how transactional is defined. So again, it can help you see where maybe most of your business sits. We can also drill this down, not just by the source, the branch or the MGA. We can actually break this out by advisor. So depending on how much business is there, you can kind of see where things are looking and how that individual ones are. Obviously, if it's 2 cases, it's going to be a little difficult to get some meaningful numbers there. But if you do have a couple in a branch or you want to break it down, we can look at that as well. So it can be helpful. We're building a page 2, which will be exciting. And that page 2, we're going to look at potentially, you know, what are the decisions? What's the split between standard? How much is declined? What kind of wastage rates are you looking at? So we're really trying to build it out to make it meaningful and useful. Again, because if you're looking at that and you're sending in, you know, 50 cases and half of them aren't going anywhere, then, you know, is there a concern there? Is there something that we should be digging deeper? Or if you're looking at it individually and you want to increase your e-app rates or increase your placement rates, it gives you an opportunity to see that. It'll also, we're looking at APS rates as well, just again, because that will impact overall cycle time in each one of the buckets. If it needs a doctor's report, it takes a little bit longer, obviously, to secure that and to get that information in. But overall, it'll hopefully give you some insight into the business and what's coming in and how it's moving through. So that was the bulk of my presentation. And we'll just go to potentially some Q&A.
Excellent. Thank you very much, Selena. That was very informative. I will just let everyone know you will remain muted, but if you want to ask some questions, just type them into the Q&A. I've been answering a few as we go. One of the ones that I was asked, Selena, that I thought might be just useful, you touched on it briefly, but the topic of preferred health styles within kind of the accelerated underwriting bucket. Can you just talk to us a little bit about maybe why those changes? And I know myself, I often position Vitality as kind of the opportunity for preferred rates and maybe that being the forward-looking mechanism for how we achieve that. But you probably speak to it more eloquently than I do.
Yeah, and that is one of the things that made us feel comfortable without preferred is that there are potentially options, and we are looking at Vitality potentially being available in more than like on all our products at some point. So it is something that I know I've talked to advisors about saying, have you thought about Vitality? That gives you that discount and helps you reward someone potentially for that healthy lifestyle. When we looked at preferred and we did a review and an analysis of our health styles, we weren't necessarily seeing a better outcome or improved outcome in a health style 1 versus a health style 3, for example, and 1 being top class. And a lot of the reasons for that when we look back in time is those preferred guidelines were developed, I want to say when I probably started underwriting in 97, 98, where we started to slice and dice and tried to get a little more finite. We're really not that good when it comes to breaking down the mortality to that finite of a degree. And when they first started doing it, it was all based on cardiac risk. So it was all based on cardiac risk factors, whether someone had blood pressure, cholesterol, and some other things. Not a lot cancer-wise. Family history was the main component there. And I think that that's where we were seeing like cancer out there and the rates and the detection, along with cannabis becoming legal. You know, we reduced anyone that's using cannabis. We weren't providing smoker rates anymore because we felt like that was kind of leveling the playing field. The genetics legislation came in to play. We have pandemics now that have come into play as far as impacting individuals. So because of all these different factors, we didn't feel that the preferred guidelines were really giving us that comfort to say that this person is actually a better risk than the other person. So it really goes with more of that lifestyle choices when it comes to vitality and making an impact when it comes to their activity and other things that we can measure, and they can get the discounts from that side of it. So we thought it was a trade-off that was fair, and then we thought made sense to have a better experience for the client and not necessarily focus on those medical factors with the labs.
Sure. And so the other follow-up to that was, is it correct to say that you can't simply elect to have those additional traditional requirements and kind of get preferred? Because I think we were doing that at one point, but today it's virtually not available within that bucket. Is that correct?
True, it's not available at all. And I think even in the past, we weren't allowing people to elect it. I think what was happening was if we had $1 million limit, people were applying for $1,001,001. And then they were getting labs. Yes.
That's right.
But now the $1,001,001 is still within it. They'd have to go $5,001,001. And there's some products now that we've eliminated preferred completely. Sure. So obviously PAR is one of those, and other ones that you'll look at that Health Styles is not available. And that's the route that we are going with that. The other thing too is it really doesn't make a lot of sense to risk the decision because there are still some surprises. No matter what we did when it came to labs, there was still a small subset that potentially was a diabetic that didn't know they were a diabetic when we got our labs in. It's just that it was a small enough percentage that we felt that on whole, en masse, it made more sense to not do that testing at those levels and those ages. But there is still that risk. When you decide as an advisor to put your client through additional testing, it could create something that becomes more than what you were expecting instead of getting an application potentially with a standard rate and potentially vitality.
Great. Yeah, I think that helps. And I know Jonathan will like that answer. I typed out an answer for him, but I think that was a far more detailed answer. So thank you for that.
Okay.
Just for my own interest, I'm kind of interpreting what I saw, and I think I've heard you speak to this before, but is it a fair summary to say that the claims experience that we've had as a result of maybe COVID and the pandemic is sort of just in line of what we'll call normal in our reserves? Is that kind of a good summary there?
Yeah, great summary. And I think people were concerned that there were some articles saying, oh, insurance companies are going to be hit hard, or there's going to be a problem with bottom line finances and insurance companies with this pandemic. And of course, at the beginning, we did a lot of modeling. We looked at it, what's worst case, best case. And I know we had a lot of meetings with actuaries, and they were very comfortable with what was priced and what was on the books and what was happening and what we were seeing. So it wasn't out of line. I think where the question is now, with all that delayed healthcare and testing and everything like that, does that impact someone's future mortality? And that'll be future cases. There's nothing there right now that says, I think from any of the SOA or any of the actuarial fields where they said that they're changing pricing or what they're looking at. They may change assumptions down the road. What that looks like might be different, but it's just, what is that impact? And everyone's still just trying to understand, what does that look like? What does it impact go forward or future cases? But it didn't behave or change what we had expected or what was within the realm of possibility and acceptable outcomes from our previously priced products.
Great. This is, again, just a curious question. The APS process, it's one of the ones that I think, our industry sometimes struggles with. From your perspective, is there, this is kind of a wish list type of thing. So I know there's not any concrete answer, but what's kind of the way to fix that and improve that going forward? I would think there's some kind of digitization opportunity, but thought I'd get your perspective because I'm not as close to it.
Yeah, and I really appreciate that question. I think doctors' reports have been, it's like a double-edged sword because it really is a protective value tool. Like there is value in getting those reports, but there's that trade-off between the time it takes and trying to get it easily and quickly. I do believe that once in Canada, they haven't really had electronic records across the board easily through different offices. Once everyone starts to adopt that and most of their records are electronic, I think it'll be a lot easier to transfer and to submit it to us. At this point here, it still varies from office to office. They still are very reliant on faxing things in, which a lot of times we don't necessarily see that anymore, but doctors' offices for sure still use their fax machine and send it to us. We are looking at and always have vetted various carriers or third-party providers that have said they can maybe do it in a different way, a more efficient way, a faster way. It's just getting everyone on side and making sure that the doctor's offices are still able to communicate and send to us appropriately. We are looking at, and we have always reviewed our APS guidelines to say, are we getting them when we need to? And making sure that we understand that we're not getting them for comfort. It really is something that makes sense, or because of the face amount and due diligence. I think that the only way is if we are able to get them electronically, and it is an easy process that the offices have to start shifting their mindset to. And I think a lot of offices, doctors' offices, aren't quite there yet. So just trying to encourage them and making it as easy as possible. But that'd be a great solve if we were able to get them quickly and easily.
Yeah, definitely.
On it. It was interesting during the pandemic. We were actually getting APS's doctor's reports faster because some of the offices were either closed down or they weren't taking patients, or so they were catching up on, and they could bill for doctor's reports. So they were coming in a little bit faster when we were thinking that we might have trouble. So where we weren't getting potentially labs because healthcare providers or the third-party providers weren't able to go into people's homes, or they discontinued doing it for a little while, or their nurses were helping frontline vaccinations, doctors' offices were turning those over a lot more quickly.
Wow, interesting.
Yeah.
Not what I would have expected, but a good silver lining, I suppose. I think with that, there were a few more questions, but a few of them we'll take offline, and we'll certainly get back to you. So if your question was not answered today, don't worry, we will get back to you. We'll have your local wholesaler reach out. I certainly want to thank you, Selena. I enjoyed that presentation, and one area that I actually learned a few things today was around some of the reinsurance lingo. So that was helpful for me. It seems like every time I hear you speak, I learn something new. So thanks for sharing your time with us. And then for those of you on the line, I want to thank you all for joining us today and taking the time to listen, certainly to Selena, but getting some Manulife messaging out there for you as well. Your next session will be at 1 p.m. So you will head back after this presentation ends to the lobby, and feel free to select your next session, and have a wonderful day. Thanks so much, everyone.